What's going on, guys? Welcome back to the channel. So just on Friday of last week, I ended up taking a swing trade on the stock Mogo. So we're going to take a look at the charts here in a little bit, but I want to run through the website and sort of the products and services they offer so that way you guys are well informed and educated on the company as I am. So I gotta say, Mogo is doing a very good job in terms of incentivizing consumers to use their product. They're really grasping that very well. They're also doing a very good job at falling in line with the way the world is moving. We will get to that in just a bit. A better way of saying it is Mogo is doing a very good job at bending the knee to the powers that be. We will get to that in just a second. So overall, Mogo chart looks good. That's the reason I hopped in. Going further, company looks good. They're doing a lot of things that currently right now are very hot, popular topics in the market. So whether it be the marketing team, management team, they're doing a fantastic job at basically hopping on and in line with all of the momentum that's currently driving our world right now. So the first thing I want to talk about is a service they offer, free monthly credit score monitoring. So remember that Mogo is a Canadian-based company. This is for Canadians, okay? So nonetheless, they do offer a service of free monthly credit score monitoring. If you want to look more into this, just go to their webpage and read down here. A lot of other cool things about it if you go further down the page, all right? Next thing, fraud protection. They offer free identity fraud protection. Again, that's a pretty big thing. As you guys know, there's a lot of companies that offer fraud protection services. If you want to learn more about that, scroll down. We're going to be getting to what I believe is one of the best services, products that they offer, and I'll explain why this is so big. They offer a prepaid Visa card. Now, the reason it's big is not because this product makes Mogo money. It's because this is the product that gets people in the door for Mogo to then make money. And the product that they're offering has such a strong incentive that comes with it that there's almost no reason as to why you don't get it. Let me explain. If this service was offered in the United States to me, or hopefully expands here, I would use it undoubtedly. Let me explain. This is a prepaid Visa card. Somehow, some way, I don't really know exactly yet, but this company is going to be taking on a mission to plant one tree for every time someone makes a purchase or a tap with that card. They call it a tree planting carbon sucking machine. Let's scroll down on this one just a little bit. Plant a tree with every tap. You can save money while helping save the planet with the Mogo card. We are removing our cashback rewards and original carbon offsetting feature so we can increase our plant saving impact tenfold. Every time you use the card, you'll plant a tree by using the Mogo card for all your spending, etc., etc. So it looks like they were going to be offering some sort of cashback rewards, just like Visa would do, like a 2% cash back on everywhere you purchase sort of thing. Well, it looks like they're not going to use that, and the money that they would have been spending in rewards, they can now put towards building a greener future. Very, very positive. Governments want it. Everybody wants it. It's in the headlines. It's in the news. If you see something like we need a green future, climate change, which we know you see that, and it's going across the headlines of every major news media outlet, whether you call it propaganda or not, the powers that be want it on the telly. They want that to be programmed to you. So a company like Mogo is doing what the major mainstream network TVs are programming to you. That is very good. The entire world knows about climate change. I know about climate change. I know trees are carbon sucking machines. If you guys are willing to plant a tree for every time I purchase, sign me up, sunshine. But I don't live in Canada. You get it. Don't live in Canada. All right, we're moving forward to the loan section. So now you kind of see how they're actually going to make money because they're offering you free credit score, free fraud protection, free cards, they're planting trees. I mean, it sounds like the United States government, free everything. So let's at least figure out how they make money. Oh, well, they're going to offer loans. So you can use Mogo to get yourself a loan, go into debt, and get charged interest for it, which is okay. Everybody needs to go into debt sometimes for some things. So with that being said, Mogo offers loans where they will collect interest, and they're going to make money in doing so. Next thing they offer, which I really, really like, this is next to the card. They will offer mortgages, all right? You know as well as I do, mortgages, that is meant for banks, okay? Banks are the ones that benefit from mortgages, not you. That's why banks offer mortgages. They needed to loan money, so they told everybody that everyone should own a house, or owning a house is a great thing, because they needed an object that had such a high value that you couldn't afford, aka you purchase this loan for us with interest to buy this. We can't sell you the idea of taking on debt if you're not going to get anything that you want for it. So we're going to tell you that you all need this big, old, beautiful home to live in. So you can't afford it, but we have the money. So we're the ones that plant the idea to you to get the house, and we're also the ones that will supply you with the money to get the house. You get it? So Mogo is going to make money off individuals that way. All right. But the cool thing about it, like I said, Mogo is really capitalizing on the direction and the momentum that the world is currently progressing in. What is that, you might ask? Bitcoin all-time highs, YOLO. So here you can see company Mogo is offering, when you take out a new mortgage or refinance one with Mogo, we'll reward you with up to $3,100 free cash back into your Bitcoin and rewards account. They're basically, Mogo is like a leech right now. I mean, they have their fingers in every single cookie jar they can have them in. Climate change, Bitcoin, crypto, fintech. I mean, what more could you ask for in a company right now in terms of their marketing model? I mean, take my money, right? Well, they did. That's why I bought the stock. So next thing that we will get to here is wealth. This is another really big thing. I mean, like I said, put the hopium in my pipe and smoke it up. Moka. Moka is an investing app. So just think of Moka kind of like a Robinhood / M1 Finance / Acorns, who is now partnering with Mogo. So anybody that uses Mogo to finance a loan, anybody that uses the Mogo card, or anybody that has a mortgage will have an account with Mogo, and then that will be linked to Moka, which then means you can take the money from some of your Mogo accounts, have this cross-connected web network from sort of this financing side, mortgages, loans, and cards, also to your investing. So they're kind of interlinking your long-term investing capabilities with some of your finances like loans, mortgages, and so on. So they're really kind of creating this cross-connection web to really get you intertwined to their whole business model, so that you look 5 years down the road and you're so intertwined into them that you can't leave. Kind of like what Apple did to you. You ever look back and realize how much money you've spent with the company Apple? And then you think, how did we get here? And then you look down and realize that you're an idiot that had to buy a dongle. Yeah. But anyways, great business model. Next thing, Bitcoin. Huh. Where is my pipe? I need as much hopium as I can get here, folks. I mean, does it get any more hopi-ish? The smarter way to invest in Bitcoin. Now, this is just, I mean, like, seriously, keep it coming, please. So nonetheless, they have a trusted way to invest in Bitcoin. What they're selling you on here is that if you invest in Bitcoin through Mogo, that the fee to get the Bitcoin and do the whole transaction through Mogo is going to be far less than if in the future you try to do it through a Bitcoin ETF that would, take a percent or 1.95%. So they're basically saying that they're going to be a smarter option to get Bitcoin as opposed to investing in like an ETF that will or may be available in the future that's actively managed, because the people actively managing it will charge more of a fee than Mogo will. So So that's really up for you to debate. Right now, in the current moment in time, there really is no true good Bitcoin / true cryptocurrency ETF. The only ETFs that really exist out there in the market right now are like Grayscale, and I believe they're working on a new one. But nonetheless, all the Bitcoin ETFs that you see out there in the world are really just currently publicly traded companies that have a lot of money and capital invested into ventures for cryptocurrency, or are already working on Bitcoin applications, or they already own Bitcoin like Tesla, so that those companies have exposure to the crypto market. So when the crypto market goes up, typically those stocks are going to have a positive move with the crypto market. So all the Bitcoin ETFs and things that you see that exist in the world right now are, or that are talked about being opened up currently, typically revolve around investing into companies that have exposure into the cryptocurrency market. So what they're saying right here is probably something that you can just consider as more or less an idea of the future. Alrighty, ladies and gentlemen, that really covers the whole hopium side of it. Now let's give you the hopium on the technical analysis side of it. So when we look at Mogo here, just really quickly, we're going to look at a 3-year weekly chart. So if we look back at a 3-year weekly chart, I normally don't do a whole lot of support and resistance on my channel like this anymore because I use the standard deviation system. But if you look at where the market bounced and we just go to the absolute bottom, put a line, extend it left, you will see it bounce near this pullback, and it's holding over the top of these 3-year highs from back here. So market moves up, resistance, we get through, pulls back, holds, breaks out, pulls all the way back down to that same dip, starts to bounce, and well, it was the also previous resistance tops, which now support from like 3 years ago. So that's a bonus. Now, if we look at the volume here for the weekly chart, you will see that we just had our first weekly volume breakout, kind of in a while. So you can see big seller candle, sellers have control, buyers don't beat sellers, sellers still in control. Sellers are over the green, sellers in control. Green still doesn't beat red, so sellers still in control. Basically even, and then we finally right here just got our first green volume on the weekly to break over previous reds, so suggesting that the volume is picking up on the buy side, momentum can be picking up to the upside. Something else that I don't really pay attention to that I just so happen to notice right now, but when the RSI is moving through 50, that's when momentum is actually picking up. People say when it's over 75, 80s, that's when it's overbought, but when it's crossing through 50, that's generally when momentum's getting ready to pick up to go to overbought. That's occurring on the weekly chart. All right, moving forward, we're now going to take a look at the daily chart. So 1 year, 1 day. So when we look at the 1 year, 1 day chart, you can see that this stock went on a great move up. We have now come all the way down and we are starting to bounce. So the idea is that this market has in fact bottomed, descending wedge. There is also a bullish divergence that occurred on the daily chart and also the 4-hour chart. So as the market on Mogo is downtrending, going into lower lows, relative strength index is creating higher highs. So that is an early signal that markets will be bottoming to reverse. Bullish divergence. All right, that's number one. Number two, who really knows? All right, next thing that's important. Not only did Mogo hold perfectly here on that previous kind of dip area, but nonetheless, if we look at the statistical trend of the market, Mogo has come from overbought, trended all the way down below, this is called the average, so this is kind of like normal pricing of this market, to oversold. Now we're into a value opportunity. Now we oversold below this level. This is stronger value than the previous value, so this is like value times 1.5. All right, we get right below it and the market gets sucked up. We are starting to break right over that trend. So if we zoom in on that day, you will see that there is a significant volume spike there. So I will show you that this trend system predicts the breakout right into there, and you'll see all the volume happen. We will get to that in a second. Next, what I want you to consider is that over the next couple weeks, we pretty much anticipate the first target for Mogo is going to be up to this 727 mark. So pretty much there. All right. So right now, our minimum price target zone for Mogo right now is 728 to 670. I'll show you why 670 in a second. I'm going to put a red line here. Ready? 670. When I change the time frame to 180 day, there should be a yellow trend line that comes into play right there. See that yellow trend line? I was off. Orange trend line, it's 670. So we expect probably next week Mogo will squeeze up to this price. We might get a little pullback here. Hopefully we go straight through it and get up to 7. All right. But nonetheless, we do expect over the next week that Mogo is targeting into the 660s to 720 mark. So that is our minimum long swing trade for the time being. Now, to sell you on more hopium, the true objective is to get the market through 727. If we can go through the statistical mean, which is this previous high, we will then explode most likely towards $10 or 970. But one step at a time, folks. So nonetheless, we're swinging long, MOGO, first target 670 to 720. Afterwards, if momentum still looks good as we get to that resistance zone and we think we can break the 7s or really the statistical mean, we will then look for moves to 8, 9, and 10 and so on. But for right now, it's realistic that you should just watch for the $7 mark. Okay, so now what I want to do is pretty much show you how you guys could have watched this market in this downtrend very closely using the standard deviation system to give yourself a very ideal long entry point with very minimal low risk and also stop loss if you wanted. So we will first look at this line here. Boom. Okay, we're going to change the color. I'm not going to do every single trend line right now. We're only going to do these two that mean the most for the entry point. We will then go to this time frame. You see this white line? We are going to draw down. Now you're starting to see the wedge where the thing broke, right? You see my trend line from my trend system there, and this trend line from this time. It's same system, just different time frame. That's the white one. We will notice that when we go and look right here, that was where a lot of volume starts to pick up and it becomes your low risk breakout entry. So now let's go look at, say, like a 10-day, 30-minute. No, that doesn't really work very good now, does it? Let's look at a 10-day, 1-minute chart. Okay. So when we look at a 10-day, 1-minute chart, you will see the market pushes up. We get to Mogo's 2 trend lines, price channels in between. Look at the volume, pick up there, squeeze up and through. Then you can see the volume, pick up there, and so on, so forth. All right. So you can see that as we start to cross right through these statistical long-term levels, you are starting to get your massive volume spikes. Now you would say that, Connor, these spikes aren't anywhere as big as those spikes, or there was a lot more volume here and a lot more volume here than here. So isn't this the significant spot? I mean, yes, that was a significant spot. That's the market first attempting to get us back to these trends. And if successful at crossing, then you're right. These people or whomever started this move fully was right, and the market is starting a new trend higher because we broke out. There is a portion of the market that wouldn't know this would be the exact bottom, but could say, hey, if we can actually cross through trend with confirming volume, we're breaking out. So just the other week, the market on Mogo, you can see breaks over these lines, which is the long-term statistical trend. It holds, it holds, it holds, and it starts to move away. We're just at the 100-day and 200 moving average. If we get through that, that's a good sign we're starting a new uptrend. All right, so that's just a little bit more hopium for you. All right, now what we're going to do is we're going to take a look at the target. So if we expect that the target is going to be up to 660, so we'll just say that minimum is 660, and this is where we're trying to go, and that's it. So if we look at 660, okay, and let's say that you followed this system to a T and you took your entry here, okay, you would have an entry at 480. You would be targeting 662, so 6.62, okay, minus 4.80 equals $1 $1.82. Let's say we want to do a 1 to 2 risk to reward. Divide by 2, okay? That equals 91 cents. That means our stop loss from our entry of 91 cents would be down to, one second. So if we had a 91 cent stop loss, we would have to go all the way to right there. So if you entered long MOGO at the break of the statistical trends here, targeting your next statistical trend of 660, giving yourself a profit target of $1.80, a 1 to 2 risk to reward leaves you with a 91 cent stop loss. Following this logic in this market structure, your stop loss would be located just below the previous low. All right. Let's go for a better risk to reward, as in, is it possible there's a better risk to reward to be had on this trade with an entry right there? Can we not risk the low? Is it possible? Yeah, let me explain. So, if this is meant to be a true breakout, then that means the market's not going to come back down and break under, right? If this is a true breakout, and this is a true breakout, and we're going to go here, the market's not going to go below that, right? And if the concept is you're putting yourself in with smarter money here, institutions, maybe market makers, people starting new cycles, if that's the belief, right, then you would assume that smart money doesn't want to get stopped out and they're going to do their best to keep themselves from getting stopped out. So here is the very, very interesting thing that I'm trying to wrap up here. All right. So our profit target was $1.81. Let's divide that by, say, 6. Let's go for a 1 to 6. So if we do a 1 to 6, we will have a stop loss of 30 cents. Entry is 480. Okay. So stop loss of 30 cents is 450. Okay, so if we do a 1 to 6, then our stop loss for our entry, if we entered in here at the red line, sorry, so if we kind of entered in this zone, 30-cent stop loss would be here, right? And at that point, you can see if you came down under, you would be breaking sort of that higher low, or you would be breaking down maybe this support level. And at that point, yeah, the bullish pattern might be gone. So you might not have to wait for the low. But the concept here that I'm really getting across is this is a situation where you could actually go for like a 1 to 6 as opposed to a 1 to 5. And that is because really, if this is a true breakout and you can see a lot of that big volume came in there, if it's smart money moving the market, then their entries are all kind of right in this zone. And they're not going to want to stop below that. So again, if smart money really bought the move, they don't want to get stopped out. They're not going to let it run back down below this orange and white trend line, right? Think about it. If this is the entry, white line, volume spikes, right? If we pull the volume up, you will see significant volume spikes happening through that trend. So let's just say it's smart money. Smart money moves markets. Smart money makes more money. Smart money doesn't want to get stopped out. Then the likelihood of them letting the market go below their entries, very unlikely. So this is a situation where you could just be long from here with the stop loss of maybe 50 cents or something, because they probably don't want to let it go back below the 480s because that's most likely where smart money was entering that move. So nonetheless, I think I may have sold you guys on enough hopium already. I am bullish. Those are my cases. Bullish divergences, bullish buying volume, down at the -1 deviation price, which is on sale. Mind you, if the market does go back up from where we're currently at to the statistical mean area, which is one of our first targets, that could be a gain of about 30%. If we end up hitting highs of, say 9 to 10, that's about 70%. So volume looks good, trend looks good, company incentives are good. They did a really good job of selling me on the hopium. So cheers, ladies and gentlemen. Hope you guys enjoy the video, and I'll see you Monday morning, 8 a.m. as always.